Wow, wow, wow. Welcome back and welcome back to 2023. I'm really excited to see all of you here today. And you know what? We are in the midst of our Chinese Lunar New Year. And I want to wish all of you a 恭喜发财. That's the traditional Chinese greeting for celebrating Chinese New Year. And I was away in Dubai throughout the period, and I got so many fascinating stories to share with all of you. But today, first thing first, I want to welcome all of you, new students, past students, and as well as future students. I'm really excited to present to you the Spiking Wisdom of the Greatest Stock Investors Program. Now, this is our flagship program. Now, that being said, I always want to attempt to teach it really differently, from different aspects, from different thinking, but the core central piece of the thesis remains the same. That is the reason why I call it the greatest stock investors program of all time. Now, this is super important. So before we begin today, I want to start off by asking all of you, how are you? First thing first, please, I want to invite all of you to turn on your camera. You can engage with me. I can see you. You can see me. You can see all of your classmates around together in the same class, all right? And this is really important. Now, I have also been attending multiple classes on Zoom. And oftentimes, I found it most useful and productive when I kept my camera on. And that's the kind of discipline and accountability for me towards the teacher, for me towards the fellow classmates. I want to encourage you to do so, and this will be very helpful in your learning curve, all right? And there you go, everyone, keeping your camera on. And I'm going to teach you guys the traditional greeting right here at Spiking, all right? And those of you who know, you're going to run together with me, all right? 3, 2, 1, here we go, we say hello! Welcome all of you, wow! Welcome back. Thank you, keep waving, I see all your friends right there. Woohoo! Welcome back. Oh yes, and that's our traditional greeting. Now, the next 2 days is going to be really kind of a fast and furious, but not that fast. I want to make sure we really get into the basics of investing, and this is really the right time for us to be grounded. And I want to first of all get you encouraged, take out your black book, secret black book, or if you have an electronic notepad, and that's what I'm using, or you can have the traditional pen or pencil and a notebook. I want to inculcate the value of just writing down, all right, on your notebook. This is very important. And once we get started on that, then I want to clear off some of the logistics with you guys so that you don't lose out, all right? And in fact, I want to straight on tackle the key questions that commonly asked among our angels. And that is this: how many of you got stuck, really kind of stuck, at the account opening of Interactive Brokers? Just wave your hands in front of the camera, and I see some of you got kind of stuck right there, right? Now, typically you are stuck because you are asking a question. They were asking you a question about, are you a new or experienced trader? Now, the moment you say new and you state that you have zero experience, they will reject your account application, all right? And that is the reason why you are going through this program with me. In fact, upon completing these 2 days, you are so far ahead in terms of experience compared to many of the traders out there. In fact, I would say you have easily attained more than 3 to 5 years of experience just by attending these 2 days class, making sure you are fully committed throughout this 2 days class. You have leapfrogged 3 to 5 years ahead. So you can state right there in your account opening, hey, I have 5 years of experience, and in fact, everything that we've done over the next 2 days is to squeeze the time. You're going to learn the best strategies from the best money managers on Wall Street, all right? So once you do this step, the account opening will be really, really smooth. I think some of you put zero experience, you'll be permanently they will reject you and ask you complete many, many other strange questions, all right? So, looks like I'm on a karaoke mode. I just switched it off. Thank you very much. Sorry about it. I think my cat just stepped on it. All right, so once we clear that, and let me go through the great student checklist with all of you, all right? So the place that we're going to communicate with each other throughout the class is at spiking.com/feed. Spiking.com/feed, all right? And we're going to post some polling. We're going to go into audience Q&A. We're going to share some ideas. Every now and then, I may also switch between spiking.com/feed, and I might switch it over to Twitter as well, right? So a few places that you really need to get very acquainted with. First, spiking.com/feed should be on your desktop, all right? Then once you get that done, the other ones that are really, really useful to you, which you should be using on your mobile phone, and these are the following. Number one will be Twitter. You should be very comfortable looking at the Twitter on your mobile phone, all right? And I'm talking about downloading the Twitter app. Number two, this is our Spiking Global community where we'll send out broadcast messages to you, and that's the one in the center, the middle. And number three, the one in the red box, that's what we call our WhatsApp helpline. And that's our verified WhatsApp helpline. And you know, when you post the questions over there, you see a verified green tick on the WhatsApp account, and our angels will be responding to you, all right? So these are the three places that you should be very confident, comfortable using your mobile device to communicate with our team here at Spiking. The one for the class that I'll be using will be spiking.com/feed, all right? So this is the first thing. I call it the great student checklist. So I'm going to take it really slow. Make sure you're really comfortable on your desktop. You'll be going through our software. On your mobile device, you'll be looking at Twitter, looking at your WhatsApp, and that's really, really comfortable pace, okay? Now, why am I sharing with you all these best practices? Because I want to tell you I attend all the best programs out there in the world, and nothing beats being hands-on as a student. You're very comfortable in this new generation of learning with your mobile device, with your desktop, and please, when I say desktop, I do not mean iPad. You should use a full screen PC or your MacBook or your laptop. Do not use an iPad, all right? Please don't do that. You should always be in full screen mode. And just give you a feel, I have like 4 major monitors in front of me right now. A major TV as the backdrop, I can see all of you. And right in front of me, I got an iMac. On the left, another iMac. On the right, my full control system looking at everything, all right? And I'm also looking on my mobile device at the same time. This is really important. I'll be teaching you how to trade on the fly, meaning to say trade on a mobile device. In any parts of the world, in any time frame, you can just fire off your trades easily, all right? So this is the new generation of trading. And if you are not comfortable with that, I encourage you, make full use of these 2 days to get comfortable. Overcome the little barriers, and then we're going to get ahead with a great start. Okay, next important checklist, please keep your Zoom camera on for best learning experience, all right? This should be a basic requirement. I can see quite a number of you, your cameras are not on for whatever reason. I do not know. But I will tell you, I only take those who've got their camera on as my serious students. I want to make sure you really understand what I meant when I look at you as my serious student. You see, today there are 3 groups of students attending my class right here. The first group, who are, I call them the latecomers, the one who have many excuses. They will come late and they will just keep saying, I'll watch recording. These are not the serious students. These are people like on the way, by the way, oh, I want to learn, I don't want to learn. Today my mood is no good, my body is no good, I will not show up. They have the same attitude towards money, and you know the outcome. The outcome of their money is just as frivolous as how they attend a class. So I believe most of you here don't belong to the first group. Very good. Let's talk about the second group. Those of you who come on board, the second group are those of you who keep your camera on throughout and you really participate. You really follow through, and I can tell you the 2 days that you spend time with me will more than compensate for anything that you want to know in the market, because I love to teach. This is my core passion. And I can give you my best provided you give me your best by asking right questions at the right time. All right? So most of you, I believe, belong to the second group. Third group of you, for whatever reasons, that your camera is not on, I do not know why. We have been repeatedly telling you, please get your equipment ready. Now, why this is important? Because you should treat this class no different from a live class in a classroom. That's how you get the maximum value out of the 2 days, all right? Because once you know people are watching you, you become a different student. You become a great student. You are accountable to the teacher and accountable to your fellow classmates, all right? So I want to encourage you, what you get out of the 2 days depends on what you give in today. And I encourage you, please keep your camera on. All right. Next, video recordings will be available exclusively at the learning community. But I can tell you one thing. If you just keep thinking about watching the video, let me tell you, you're going to lose out a lot. Because at different timing of the class, I'll open up for Q&A. Now, can you imagine you watch a recording and you want to ask a question? Your teacher, yours truly here, will not be there to answer your question. So make full use of the 2 days, give your maximum attention, and then ask when the Q&A is open to you. That's where, bam, you learn immediately and you get the maximum impact, all right? So I encourage you, don't think of the recording. Think of right now. Take full advantage, soak up everything that you can possibly learn, and I'll give you the time and space to absorb, all right? That's my promise to you. And finally, the Q&A session. Please ask questions related to the presentation, all right? Do not jump forward. Whatever I taught so far, try to keep your questions within what I covered. Now, most of the questions that you have on your mind will be taught throughout the 2 days. Don't worry about it, all right? But all matters of logistics, please direct them to info@spiking.com. That is one of the channel. Or if you can't wait, you can please simply WhatsApp to our angels in the red box. All right, take out your mobile device, kind of scan on the QR code on the red box. That's your immediate helpline. All right, your immediate helpline, and make sure you're communicating with us over there. And on this note, please do not WhatsApp me, please do not Zoom chat me, because I will not be responding to any questions that you post on the Zoom chat. All right? I'm not looking at those questions there. My angels are the ones supporting the entire class over the 2 days. Now, I only respond to questions that are posted on spiking.com/feed, F-E-E-D. All right? So those are really important logistics that we want to deal with earlier on in the class. Now, without further ado, I'm going to jump straight right now to kind of give you a flavor of how I want to direct the 2 days class to kind of jumpstart you ahead of the curve, all right? So here we go. I'm going to talk to you very in the beginning why I fell in love with trading, all right? And, you know, it all started because back then I was still in the university and I was asking myself a question about, hey, what do I want to do with my life after I graduated from the university? And one thing for me is very clear. Even though I was studying engineering degree, I do not wish to become an engineer. I was completing my civil structural engineering degree because of my father. I feel I owe him an obligation as a son, and I just do it. But truly my passion is about learning really the best wisdom out there of how to become an investor. That's my true, real passion. And that's the reason why the first 5 years of my life, I dedicated myself to mastering the art of options trading. And you know why? Because options trading was crafted out of a Nobel Prize winning formula known as the Black-Scholes formula. And in 1973, they launched the Chicago Board Option Exchange. And because of that, holy moly, I fell in love with options trading, and for 5 years of my life, I do nothing but just trade options. So in the beginning, it's about, options trading and why it's so important. And of course, I will share with you the difference between public information versus private information. Then the next thing is we're going to kind of spend a little bit of time talking about the market outlook, past, present equals to the future. Now this is kind of a big topic that I spend every month during the Cozy Live Trading event. Now this is a very, very privileged event where we really share all things, no holds bar, all right? And I want to kind of keep it very, very limited during these 2 days because most of you are here to learn about hands-on experiences, how to get started in trading. Now, I do not want to overwhelm you about the market outlook. Those are the topics that I covered during the Cozy Live Trading event, all right? Now, first, get your foundation right, know how to trade options, trade stocks, know how to analyze companies. That is what I call the Cozy Wealth. This is really your foundation. Now, the Cozy Wealth, later on we're going to break it apart, and then you understand our approach to what it means to the Cozy Wealth. There are basically 3 instruments surrounding what we want to achieve of what we call sustainable wealth: cryptos, options, and stocks. Now, some of you heard my presentation, and I spent quite a lot of time just talking about cryptos, options, and stocks. And many a times, people fall back and say, hey, teacher, why don't we just look at stocks? Why don't we just put options aside? Why don't we just play cryptos and don't look at stocks or options? Why not just do 1 or 2 out of the 3 and not focus on 3 of them all? And this is really a big subject. Last year itself, 2022, when it unfolded throughout the 12 months, holy moly, those who stuck on the 3 instruments will begin to understand this is so important, all right? I'll spend a little bit time with you, sharing with you more about the Cozy Wealth. Next is about winning the war. How do we go about winning the war is the concept of WAR. You must have a wow event with an announcement date and kind of the chances of it recurring pretty frequently must take place. And all these are just big ideas that how I started in the beginning, and then we operationalize it through the platform that we built called Spiking, all right? So don't worry about all these big words right now. Later on, everything will just come so real in your life, all right? Let me just cover all the key points. And a question that we always ask, the philosophy of spiking is, will it spike? The key question is, will it spike? If a stock price cannot spike to the direction that we want, then there's no chance to make money. So if you put out this phenomena, what it truly means is that we should always enter before a stock price spikes up or down, to take advantage of the spike. And this relates to a very important theory, I call it, called the theory of the time squeeze. How can we squeeze time to get more results in a much shorter amount of time? And all this falls back on this question that we constantly ask ourselves: will it spike? Can I get in before the spike? Because if I can't get in before the spike, then we are just wasting time. We're going to show you how to do that over the 2 days. And of course, with the introduction of our top investors on the planet. I will start off by introducing to you the top 100 money managers. These are really the best money managers on Wall Street. Consistently make money over the past 10, 20, some of them including 50 years of trading experience in the marketplace. That is the best training ground for all of us, and that's the reason why we really have to focus on the best out there. All right, not the guys with the small money, but really the guys with the big money. We're going to give you exposure to that. And of course, I will bring in our flagship Fiat analysis into the picture, FIAT. And of course, we're going to spend time applying this knowledge. We'll start off with Daily Bread, which is our one-day strategy for making money. Get in today, get out tomorrow. And then we'll go on to Resurrection, our 1 month strategy. Get in today, 1 month later, get out. And our triangulation strategy. Get in today, 3 months later, get out. Now, which time frame you should be employing? That's for us to get to know each other over the 2 days, all right? You're going to learn so much about yourself. Now, that is just a brief introduction of 10 chapters already. By the time we'll arrive at good, the greatest of all time, which essentially means we are looking at really key sectors of the market that will kind of play out over the next 12 to 24 months, all right? I'll be talking to you quite a number of fresh ideas that kind of started off 2023 for me, and one of the big idea is, will the US and the Chinese China get into a real war? All right, today as I was reading the news, kind of a few things has happened today. Israel just launched some kind of a drone strike against Iran, and this is a very volatile world that we live in. And of course, there's another big news that's going around that Russian oil has been mixed together with the traditional crude oil out there, and looks like the war in Ukraine is not going to stop anytime sooner. Many things for us to think about, but those are the issues that will filter down, end of the day, greatest of all time. Which sectors should we focus on, all right? Then, of course, I'll share with you a little bit more about YOLO, you only live once. And this is really the flagship of our crypto. I believe in Bitcoin. And in the world of Bitcoin, you will realize that recently the price has started to move. Kind of from the bottom of 16,000, move up to over 20,000. We're going to spend a little bit of time looking at it, whether it's worthwhile for you to chase Bitcoin since you only live once. And then, of course, I'll share with you about greed. This is the magic formula that kind of dispel all the myth out there. It's really not about your IQ or your EQ. And in fact, you know, the kind of friends I hang out with, most of them got kind of bestowed upon them what we call generational wealth. Second generation, third generation, fourth generation. I got a friend who's like running the 5th generation of his family business. Many of them are well blessed, but not for my generation. I do not know how many of you started as your first generation like me, of which my parents come from a middle class, and I have to work really hard to have this break, what I call the generational break, to be the first in my generation line to become a millionaire. And I consider myself the first generation, my children will be the second generation, all right? So quite a lot of things for us to think through, and greed is the 4-letter word that will give you this courage and faith. Whatever you do will come to pass, all right? And number 14, the golden commandment, if you break this, you change this, you're not going to kind of make it. This is really the most important of them all, money management rules. I'll spend a little bit of time talking about it. And of course, this is the cycle of what we are chasing after. we work really, really hard to pursue wisdom. And once you have sufficient wisdom, wealth will just keep raining down on you, and then the cycle repeats itself. So it's really start off with real work. And the work that we're going to put in is what I'm going to show you over the next 2 days, all right? And finally, chapter 16 is the live trading that most of you are looking forward to. We got a great earnings last week. All started off because of Tesla. Uplifted the market. We're going to look at the market together, and we're going to learn how to do the live trading all together. And of course, we will round up with a spiking master strategy, kind of connect all the dots together, making sure you're not lost, but you're able to connect everything that we're going to teach you from chapter 1 all the way to chapter 18, which I will end off. I call it the blessing chapter. All right? So total 18 chapters spread over 2 days. How many of you are feeling really excited right now? Say yes! Woohoo! And I'm really excited to start off right now with all of you the Spiking Wisdom of the Greatest Stock Investors Program. All right? For a start, I got great news to announce to all of you. We just received the FIFO Platinum Trusted Service Award. This is a very high standing award, a focus on what we call trusted service. And all thanks to all of our really faithful students and fans who come in and review our programs, our products and services. And I want to thank all of you. And this really puts me on the edge. I got to deliver my best each time I conduct a class. So I want you to know I'm very serious about this. Second of all, we just got a very fresh achievement. This is like the holy moly. We can't imagine we can come into this top 100 Singapore's fastest growing companies. And it was just announced on 17 January by the Straits Times, which is validated by Statista. I want to show you today really hot off. I just collected the award, and this is I'm not too sure, can you see from camera, the Straits Times Fastest Growing Companies 2023 award presented to us. So thank you all of you for helping us make this achievement. And you know, this is no small feat because we have public companies, government-linked companies, everybody competing in the same category. And we kind of feel very blessed because we came in at number 29. And all thanks to our spiking students. So I want to thank all of you ahead before I even start the class, because I know all this is through your support. And that's the reason why I'm working very hard on my upcoming new book, which is called Spiking, exactly how to make more money in less time on every trade. We hope to go live with this really soon, and this is working with my publishers in the US. We're going to have a big launch in the US, in the Europe, and perhaps in the Middle East as well. Okay, all in, and here we go. If you look at this slide, this will always be the standard time frame that I look at the market. This is a very important slide because it always starts off with the first year I started investing. That is the year 2000, all right? So I want you to kind of note down the first year that you enter into investing is the most important year. Now for me, it was back in 2000, the year of the dot-com crash. Now for you, it could be 2023, this year is your first year. And kind of a very deja vu, because I will correlate for you what happened for me in 2000, the year 2000 dot-com crash, 2001, 9/11, and then you have 2003, you have a war in Iraq, And then you have 2008 financial crisis, and all the way to 2020 pandemic lockdown, and last year 2022 we kind of faced 8 different crises at the same time in the same year, not sequentially but all at the same time simultaneously. What does it mean for you at the year 2023? So if you look at this chart right here, it all started off with the flow of thought, exactly what I've gone through from Cozy, where you are at this stage right now deciding on which is the instrument of choice for you to invest with your hard-earned money so that you can build sustainable wealth. I want to share with you some thoughts about this because Cozy is so important. My criteria for Cozy is very different from other people's criteria. I always think about liquidity. So I want you to write it down right now, this very important word called liquidity. So I'm going to spell it out for you. This is your centerpiece when you think about money. You see, many people sit on paper profits and they fail to recognize the importance of liquidity, meaning to say, if I want to buy right now, I could buy. If I want to sell tomorrow, I could sell, and I could raise cash easily. Now, most of my friends who sit in public companies, they sit on what we call paper assets. They can't really sell off their stocks overnight because there are certain rules governing you as a majority shareholder. So you're paper rich, but you're not liquid rich. So there's a big difference between. So at the very beginning, when you start off as an investor, which today I will count for you as your day one, you must think about cash flow. You must think about, hey, can I raise cash? Can I produce cash at a time of my control? That's the reason why, by asking the question of liquidity, you kind of cut down or narrow down or filter down all the different distractions out there, and you really boil it down to the most liquid instruments on planet Earth. Number one, I call it stocks. 200 years of proven history. You can't go wrong with stocks, all right? Now, typically, those who tell you stocks is kind of is a loser game or people lost money. Now, that's because they play it wrongly. There's nothing wrong with the instrument. The problem is the guy who had employed it could have used it wrongly, could have learned the wrong things, could have picked up the wrong habits. And they kind of push all the blame into the instrument. You can't really say stocks has a problem because this is a 200-year-old product that made many, many people wealthy, all right? The second instrument of choice that's really liquid is options trading. 50 years of history. How do you count that? Please write it down. 1973 is the first year Chicago Board Option Exchange was birthed. So my heritage, or the way we call it is called lineage. And let me see if I can pull that off. So yours truly, your teacher here, my lineage started from Chicago Board Option Exchange, all right? So this is my official tag. And when I step into the floor and hang out with the market makers, they give me my ticker, so-called my symbol is CLM. And you can see it's turned yellow already. I had this for many, many years. And I was first trained by the CBOE. And, very soon we'll be able to share with you good news, from the US market. Right now they are moving me, as in CBOE, they are moving me to Europe and as well to the Middle East. Because every instrument right now, every country out there right now is emerging up, all right? And that is one of the things that I just completed in my recent trip to Abu Dhabi as well as to Dubai. There's one more stop I need to go, that is Saudi Arabia. But I met the chiefs out there from Abu Dhabi Securities Exchange to the Dubai financial market. I met with the bosses there. And then I begin to understand, holy moly, they were just at the beginning when I first started in the year 2000. For them, they are behind time. Now, the US market is always at the cutting edge front. But emerging markets like the Middle East or the Europe, they are just catching up with time, all right? So this is the fascination of what we call arbitrage in terms of the instruments of choice. So I want you to know today, what are you going to learn from me about US stock market or US options trading? You are at the cutting edge. And you can go into any conversations with your friends in Europe, with your friends in the Middle East. Let me tell you, you are at the cutting edge, all right? So that is the two instruments. And the third instrument of choice is cryptos. And I've been preaching about cryptos. And in my world of cryptos, there's only one coin, and that is Bitcoin. All right, this is the truly, fully decentralized coin of the world, and no one can manipulate it, can hack it, no one can cheat on the system on it. And of course, right now, Bitcoin is really at a fascinating price. We're going to spend some time talking about it later on, all right? So coming back is a question of liquidity. Then and only then, we bring on board the question of war. How do we go to fight this war unless we can organize a way to kind of filter out or to shortlist or to identify which stocks that will give us the best chance to spike? This is a concept I call war. Start with W for wow, A for announcement, R for recurring. I'm going to show you on the product level, but right now just accept the words as it is. And once we say we are getting ready to go into war, then the word fiat will kick in, all right? Fiat stands for money, but actually it's our 4-step methodology for fundamental analysis, insider trading analysis, alerts analysis, and technical analysis. But the backdrop of it all starts from here. You are learning not from your teacher, but from the best 100 money managers on planet Earth. I call them the top 100. This is what you're getting out of the 2 days class. Not because Dr. Clemen is a guru, but because we built a spiking robot just to study the top 100 money managers out there. That's why the platform is very, very powerful, okay? Then, the second idea is the question of, hey, will it spike? So I want you to know, this is really, really important. The question that you always ask yourself, will it spike and can I get in before the spike? And all this boils down to one word. One very, very important word. And this word is called information. Those who got information will be the one that beat the game. So in that regard, everything I shared with you here, just on this first slide, we operationalize it on the platform. And we're going to demonstrate to you how easy it is to use it. Here we go. May I invite all of you right now to go to spiking.com/wealth. And we're going to start off from wealth. And here we go. Once you enter into your desktop, this is exactly what you should be looking at. All right? And if you kind of are trying to figure out how to get there, teacher, very simple. Always just click on the spiking logo and you see exactly what I'm seeing in front of me. All right? So this is always your step one. So I'm going to give you some time. Go inside here so that you can see exactly what I'm looking at and you can do a match. My screen versus your desktop should be looking at the same thing, all right? Now this is the fun part. Why do I say that? Because over here, I don't know about you, but I'm going to show you like this particular stock right now. And maybe I show another one much more crazier. Hang on a minute there. So I'm waiting for you to get in there first. And here we go. Excuse me. Here we go. We're going to look at this stock right now. And this is on the chart. Let me just adjust my chart and check this out. I'm going to look at this chart called EOLS. All right? EOLS. Nothing special about it, but there's something that happened to it today. Now, how do you get into this chart? Very simple. You can either go back to where we started from just now, over here, and click on any one of these companies here. You can click on any one of these companies here, right? Maybe you want to click on, for example, NOG. Let's say you want to click on this guy here. Just click on it. All right, I'm going to show you the shortcut. And after clicking on it, you will see this button here called View Yahoo Charts. All right? So that is the shortcut to open up the Yahoo chart. So I want you all to do that right now. And then we're going to study the phenomena of a spike. Okay? So go and click on View Yahoo chart, and it will open up to something like this. Okay? So I'm going to repeat the process again. We started from here. This is the starting page by clicking on the Spiking logo, spiking.com/wealth. And if at any point in time you are kind of stuck, just WhatsApp to our angels and they'll help you. All right? So once you're there, here we go. You can just click on any one of these companies here. I happen to click on this guy called Northern Oil and Gas. I click on it, and it will open up this particular page. So all I do is come to the top right here. There's this link called View Yahoo Chart, and you open up the chart, right? And please, you guys have to really follow through. Try to click as I guide you. Don't get distracted. Follow through. And all this should be really kind of a really step by step. You have kind of taken up the pre-course materials. But for those who, for whatever reason, you have not done so yet, take it as a refresher right now, okay? So once you open up the chart, you see something like this. And the basic discipline that you must have is found right here. Go to settings. Make sure your settings is exactly like mine. All right? What do I mean by exactly like mine? There are 4 blue selection. Extended hours, gray background, price details. Make sure you go and select is blue. And the Y scale is logarithmic. There's always this 4, all right? So just take a note of that. If you are not doing this, then you are seeing a different thing from mine. Okay? So I'm going to give you like 10 seconds to kind of play with this, and then we're going to show you the concept of a spike. All right, we are done on that, and here we go. So now please pay attention. We're going to start off by asking this very simple question. All right? And this question will kind of piss off a lot of people. Not because I intentionally want to piss people off, but sometimes, you know, some people just got to face it. Oftentimes, you know, whenever I ask traders out there in the marketplace, I say, hey, how many years have you been trading or investing in the market? So sometimes they'll say, oh, teacher, I got 10 years experience, I got 20 years experience, I got 15 years experience, I got many, many years experience. And I always start off by asking them the most simple question of them all. And that is, so you have been trading for many years. Are you aware of the fact that there are stock prices that are spiking up 5 to 100% in one day? Every day. In those days that are good, all these spikes could be like 20%, 15%, 10%. Every day is different. But this is the only market in the world where you get this kind of crazy numbers, 5 to 100% in one day. Because this is a phenomena of this great word which I taught you just now, the phenomena of liquidity. Without liquidity, you cannot see such a phenomena. So that is our step one. So just asking this simple question, we already eliminated those who are trading in small markets. Like for example, Singapore Exchange or Bursa Malaysia, Hong Kong Exchange, I don't know, Euronext, Saudi Exchange, ADEX, Abu Dhabi, whatever. They will not see this kind of results because it's simply not liquid enough. All right? And that's the reason why, going back to the primary question, hey, how many years have you been trading? Oh, you've been trading 5, 10, 15, 20 years. But if you have been trading so long, why didn't you go after those stocks that will spike up 5 to 100% in one day? How many of you with me? Just wave your hands. Right? Because if you know there's such a phenomena, then you direct all your energies and all your resources to identify, hey, what will cause them to spike up tomorrow? Done. One day. So that started off my training as an investor. And I say, my lifetime holy grail is to discover the art of spiking. What will cause a stock price to spike? That's my lifetime calling. I've been very, very passionate about this topic. And to the extent, I'm crazy enough to set up a company called Spiking and to build the tools just to identify the spikes. And that's what you're seeing in front of you right now. All right? So that is really our step one. There's such a phenomena in the marketplace. But in order for you to visually capture this phenomena, let's go back to the chart of this company called EOLS, all right? We're going to look at this company called EOLS, and you find that, oi, wow, teacher, the pre-market, the stock price has already spiked up 8.29%, mama. Some people took 1 year just to make 8% profit return. This guy did it in one day. Take a step back. Do you not realize that amount of time for you to make 8% in 1 year versus for you to make 8% in one day, the amount of time to select the right stocks is the same. It's just how you go about selecting it is different. You spend the same amount of time, blood, sweat, and tears trying to nail down this guy. Hopefully you can make 10% a year. But I just shown you there are candidates out there that will give you the 8% return in one day. So why don't we realign our thinking just to find such stocks? That's what we built right here in Spiking. All right? So how many of you are okay so far? Just wave your hands. You're not drowning it. This is a phenomena which is very mind-boggling. It will take some time for you to internalize if you're exposed to it for the first time. But once you caught hold of this passion, it will stay with you for life, all right? Let's dive into it right now. So here we go. We are looking at this 8% right up there. And I'm going to click on the 5-day. All right, click on the 5-day. Dong. And what you see over here is this. You see this small little blip right here. It's literally a small little blip. All right? And in this small little blip, right up there, this is causing the spike, which is $11.10, which is what is reflected there. And they are essentially comparing between two data points. Right over here, there's the sell high, and right over here, there's the buy low. Buy low, sell high, make money. How many percent is this? This is 8.29% in 1 day. That's what we are talking about. Okay? So everything graphically captured. Now, once you see this, you begin to realize that, holy moly, wow, you mean there's such a phenomenon out there, all right? And how come I'm missing all these opportunities? And some of you are still trying to figure out how to open up this chart, and you know, that's the challenge for me, especially if you step into the class late, and I already taught for like close to 1 hour, and you start to panic. So how many of you want to know how to open up this chart? Holy moly. Okay, so one more time, please follow with me, all right? We started from here. Spiking.com/wealth. Make sure you're at the same place. All right? We started from here. Now, if you didn't get in here, it means you did not complete the pre-course material, or you never registered to our website, or whatever reasons, that one I can't help you. All right? That is your basic requirement as a student. And I cannot keep repeating just because you are not following instruction. All right? So I want to make sure I'm going to do this one last time, and you catch the flow. Okay? Spiking.com/wealth. This is your step 1. And then you see exactly like what I'm seeing in front of me. Step 1. Okay? Now, after you get inside here, you can go and click on the logo at the top right hand corner. Just to make sure you are seeing the same as me, this is always the default homepage. You can click on the Spiking logo at the top left hand corner, so that you see exactly like me, many square boxes here. Okay? So once you see all these square boxes, all good, give a thumbs up. All good? Then I invite you to click on any of the square boxes. Basically, they are all individual companies. So I ask you to click on NOG right here. Just go and click on this space here. Bong! And you open up to a page like this. Then where is that Yahoo button? It's found right here. Can you see at the top left hand corner, just below the company name Northern Oil and Gas, there's this button called View Yahoo Chart. Okay? So the first time, once you get through this flow, it will be like natural already. So once you click Yahoo Chart, click on it, Bong, you open up like this. Okay? And once you open up here, then this is the time you can come inside here and type in EOLS just to see the 8.29%. All right, so I'm going to come inside here, type in EOLS. EOLS. Inside the box called code lookup. Type in inside here code lookup, EOLS. And then you see this particular chart. Okay? And what you really want to see is this thing called 8.29%, which is most of you wouldn't see it before. This is like just 1 day performance, 8.29%. Okay? Okay. So we are done on this part here, and I took the time to explain to all of you the phenomena of a spike. And the phenomena is found right here, that there are stocks spiking up between 5 to 100% in just 1 day. This is very common in the US market. So our job is to go and find such a stock every day. That's our job. Okay? So last week, we got one crazy stock called Tesla, ticker symbol TSLA, and you look at this crazy movement. So, how much did it move last week? 11% in 1 day. All right, this is Tesla. And again, did our robot show that we should play this particular stock? Yes. Our robot show it, and I'm going to demonstrate to you. Okay? So, relax, take a breather. Right now, I'm going to switch out. What we covered so far is just to understand the concept of liquidity, that there are stocks moving 5 to 100% return in just 1 day. Okay? And I kind of show you basically how to navigate to get to the place. So right now, at every stage, if I feel that the students are not catching up with the teacher, I will come inside here to allow you to pose questions, all right? So I'm going to come to this place. This is the place if you are falling behind, you need help, go to spiking.com/feed. You can come to this particular page to ask question. Hang on, wait for my signal. You can either type out this address, or you can either click on community right up there, all right? Either way, you can arrive at this particular page. So, for me as the teacher, I'll fire off the question, then you reply to my question, right? So that we don't mess up the whole place. Please ask your questions related to liquidity. Do not ask any other question, just focus on liquidity. It's an important concept. And I'm going to click on the topic, and I'm going to post it out and notify. Boom! And here we go. So if you have a question on liquidity, which is what I just covered right here with you, simply post your question by inserting your question inside this box. Share your thoughts, all right? So make sure you come to this red box here first, where I'm asking you about questions related to liquidity. Then you post your questions right there. I'm going to give you guys about 1 minute, kind of ask whatever you are not sure of from how I started until now. Then we can move on with the class, okay? So please go and ask your question.
Yeah,
Okay, very good. We got some questions coming in already. So let's tackle the first question. From Peter, could you explain why you do not consider FX trading as liquidity? All right, great question. So first of all, we started off by identifying the instruments of liquidity. So let me just type out right over here. And it's really easy to remember this word because it stands for cryptos, options, S for stocks, and Y we say yes. We are focused, we are really concentrated, we are really paying full attention just on these three instruments. Then Peter asked a very good question. Teacher, why didn't you consider foreign currency as one of the instrument of choice when you talk about liquidity? So here we go. Whenever we talk about foreign currency, we are talking about US dollars versus Singapore dollars, Japanese yen, or Hong Kong dollars, or Chinese yuan, and British pound, and so on. You are essentially studying the entire country. And if you compare studying a single company versus a country, which one is easier? Because the country politics, there are many, many things to think about. But if you narrow down to just studying a single company, a public listed company, you know, you can really get rid of quite a number of things and kind of keep your mind focused on it. So, number one, is it easy to analyze forex currency, FX? I don't think it's easy because you are studying very, very macro issues. Country to country relationships, and not just a single country that's isolated. You see, FX is always trading as a pair, whether it's US, Japanese, US ringgit, rupiah, and so on. It is always as a pairing. So you got to know the two countries that you're studying really, really well. And end up, most traders who are trading on FX, they rely on only one thing, which is technical analysis. That's their starting point, all right? Which is looking at charts, candles, and all that. Now, I don't enjoy doing that. I prefer to understand deeper issues. So some of you maybe just love to look at candles every day. Red line, cross blue line, cross red line. And maybe you enjoy doing that. I don't enjoy it. I don't feel that I grow as a person doing that. All right, so that's the first issue. The second issue is that for the foreign currency market, you literally cannot sleep. It is open like 23 hours. How many of you want to trade and still enjoy a great life? Wave your hands. I mean, if the market is moving non-stop, you can't sleep. Your mind cannot rest. And that will kill you. Over time, you get burnout. All right, so that's another consideration I had. And of course, most importantly is you don't see any spikes in FX. The kind of spikes that I show you. And for that reason, I did not include FX into my portfolio. Now, FX is something that my banker, my wealth manager will advise me, okay, Dr. Chiang, now it's time for you to switch to Swiss franc, switch to Japanese yen against the US dollar, and I'll let the banker take the lead. All right, so I have a portfolio of currencies. I let them take the lead just to do one thing, just to save on the interest I pay to the bank. That is how I handle my FX. Now, but if you are trading FX to generate profits, your mind better be on it 24 hours a day. It's totally different thing, right? So you have to know when is the time you let the professionals handle for you and when you can go in to handle for yourself, all right? So I hope that answers your first question. And by the way, just so that I know that you really understand what I'm saying, so Peter, if you understand what I'm saying, can I encourage you just reply back, say, yes, yes, I get your point, or I don't accept your point, whatever, right? Just make a note. Second one is, what is liquidity like in the Chinese market? So, if Mei Lin is interested in the Chinese market, first of all, you can trade in the Chinese market, but you cannot move your money in and out easily. You'll be trading in Chinese yuan if you are trading A shares in China. So the first thing that I'm really disturbed about is the capital control. It's not that liquid in the sense you can't really move money in and out easily. So that's something for you to think about. Now, for us trading in the US market, we are trading the primary currency called US dollars, which you can change for any currencies at any point in time. This is the dominant currency of the world today, and that's another consideration for you, all right? So I hope I addressed that question. And any other questions on liquidity, I just do a quick refresh, and then we can progress onwards, all right? So let me just do a quick refresh, and here we go. Okay, some more questions coming in. Okay, so Peter acknowledged, that's good, thank you. Desmond, how do you find out which stock attracts the influx of liquidity? So this is what I'm going to teach you over the 2 days. Day 1 today, you learn the mother of all metrics. So I want you all to write down this very important concept called the mother of all metrics. Woohoo! I mean, literally, it's the mother of all metrics. I don't see anyone building a much more powerful than the mother of all metrics, which is what we call the universe net stock purchase indicator, which is a proprietary indicator that we built out of our Spiking software. Now, what does that mean? It means this. Let me go and show you the Tesla as an example. So this is Tesla, and what you get to see on step 1, which I will teach you in a short while later on, is this metric called the mother of all metrics. Of course, there's a proper word for that. We call it the universe net stock purchase. Now, what does that mean? At any point in time every day, there are buyers and sellers of Tesla, of the stock. All right? So some of them are selling it, some of them are buying it. Now, who are the participants? From sovereign wealth funds, billionaires, millionaires, funds of funds, pension funds, hedge funds, retirement funds, many kinds of funds out there. All right? So they are buying and selling. So we ask as a fintech company, hey, can we take a snapshot? Ding! Now. As in now, ding, I take a snapshot. Would I know, are there more buyers versus sellers? And the answer is yes. Right now, the snapshot is positive $4.5 billion. Holy moly. You mean, teacher, you can see this? Yes. Because we work really hard to crack the code. We track every single money manager on Wall Street. And we don't waste time. We are not really interested in tracking the Tom, Dick, and Harrys of the world. Those guys are buying $500, $200. They're wasting our time. We are tracking those minimum $100 million asset under management. We call it AUM. You want to write that down, AUM. AUM is an indicator that this money manager is an influencer of the stock price. Not because he's talking aloud in YouTube. No, we don't trace that. We trace those that put in money to buy stocks. All right. So our philosophy is very different. And anyone that is AUM $100 million or above, they are in our radar. Who else is in our radar? The board of directors. As long as you are the chairman or independent director or non-executive director or executive director, you are in our radar. We also track those who are in the management team. The CEOs, CFOs, CTO, CIO, COO, CLO, whatever O out there. We call it the C-suite executive. We track all of them. They are in our radar. So can you see right now what we built out in our fintech technology is a system of analysis to track the best money makers out there who are making decisions on the stock price. That's what we do. So coming back to your question of liquidity, this is the liquidity of Tesla. But there must be a catalyst for the stock price to move. It's not going to spike every day. A stock price can only spike if there's a catalyst. So what is that catalyst? Go and click on the step 3 right over here. So by the way, how do I come inside here? Because I went to the box up there and type in Tesla, or you can spell the full company name Tesla, and then you select this guy here. I always start off at the search box right here, okay? So let me slow down one more time. You start off from the search box right up there, type in Tesla, or you spell out the full name, and then select on the company. Dong! And you will see this step 1, 2, 3, 4, which I will be teaching you in a short while after we complete the liquidity, all right? I want you to click on step 3, and then you understand the logic. The logic is this. The company announced its earnings on 26th of January pre-market. You always must have a catalyst, because this catalyst has to do with the concept of war. Please write it down, W-A-R. What exactly is war? War means, first, you must have a wow event. And after you got a wow event, second, you must have an announcement date. And after you got an announcement date, the third thing is, it must be recurring. So together, they form the concept of a war, W-A-R. Now, what is this particular event that we are looking at? It's called the earnings, right up here. Is it a wow event? Yes, because everybody is waiting to know how many cars did Tesla build and sold in the market. So that's a big wow event, earnings. Was there an announcement date? Yes. Tesla told everybody they'll announce the results on 26th of January before the opening bell, pre-market. A. Is it recurring? Yes. Every public company has to announce their earnings every quarter, every 3 months. So because of this WAR, right now we can formulate the war strategy. And when do we get in? We go in 1 day before the announcement. So let me show you 26th of January. Before the opening bell is exactly this candle. Let me just show you, all right? Or maybe I show you another way. The 5 day is easier. 26th of January. This is 26. No, the chart's not refreshed yet. Let me just change back the charts first. Okay, this is an easier way to show, all right? So let's focus. This is a candle, 26. And we will enter 1 day before the announcement, which is 25th. All right? So let me type it out here. This is 25th Jan. And right up there, that is 26th Jan. Okay? So when I organize it this way, you begin to realize, wow, teacher, so this is what you're talking about. This big spike up here, yes. Can you see there's a empty distance right here? This distance is huge. All right, this distance is about 11%. Between the day that you enter 25th to buy low and the next day you sell high on the 26th, you make a 11% return just for entering one day before the announcement. Okay? So everything that we build is to capture this phenomena. So I spent quite some time on this, and then we come back to how do you benchmark liquidity for each stock? We benchmark the liquidity for each stock by looking at who got the highest universe net stock purchase. Okay? Now how do we do that? Now how do we find Tesla in the first place? Let me show you right now. All right? So 26 is on last week before the opening bell. Look at your own calendar. And that's on Thursday. And we're going to start right here. Go with me right now on the left hand side and click on, and click on Stocks AI. All right, just click on Stocks AI right there. On the left column, I wait for you guys. Click on Stocks AI. Dong. And after you click on Stocks AI, you can click on Daily Bread. This is the one that we're going to go for, Daily Bread. All right. And here we go. It's loading up. And why are we here? Because one of you asked me this question from Pinkett. How do you benchmark liquidity for each stock? I'm answering this question and I'm showing you what happens the day before Tesla announce earnings. All right. I'm going to come here, change to 25th so that that's one day before. And I'll change it to down here to 27. So you can have a full picture of that. So you can see my date range right here, that I can manipulate the date range to be 25th to 27th of January. All right? And between these 3 days, 25th to 27th of January, we are looking at this product called Daily Bread, where companies are announcing earnings. Now, every day there are some companies announcing earnings, but each company, they have to announce earnings every 3 months. All right? So for this demonstration, which is a live demonstration, between these 3 days, there were 111 companies announcing earnings. So going back to Pinkett question, teacher, how do you determine the liquidity? And basically, my question back to you is it humanly possible to even study 111 companies? Is it humanly possible? Yes or no? Show me your thumbs up or down. Thumbs up or down. It is not possible. It's too many. Your mind will go bonkers. All right? So that's the reason why we need to make use of the robot to guide us where to look at. Okay? So remember, I'm going to start off from here again. We can manipulate the date range to be 25th to 27th. We wanted to know how many companies were announcing earnings. There were 111 companies. And straight away, the robot will organize the data that show you which stock has the most liquidity. starting from this column here called a Universe Net Q3 2022. And right number one is none other than Tesla, 4.5 billion net stock purchase. The second guy has only close to 1 billion. The third guy has only close to 800 million. So there you go. Out of the 111 companies, you go and select which one you think is the most liquid of them all. Obviously, it's Tesla. But we are showing you more information than that. We are also showing you in Tesla who are the 3 leading investors. All right? In Asia stock market, we call it the Taikor, the big brother. Somebody will always be the lead investor to take the lead. Now, if you look at the lead investor of Tesla, Vanguard is 2.2 billion. BlackRock is 1.5 billion. Voya, 1.4 billion. These are your real guys that you should follow, not some Tom, Dick, and Harry out there who only invest $500. That's a joke. And if you compare this top 3 lead investor of Tesla, 2.2, 1.5, 1.4 billion, versus the second stock, S-Pen, the number 1 lead investor only put in 576 million. Second one, 120 million. BlackRock, 94 million. It's way apart, right? If you look at IBM, the lead investor only put in 222 million. So, going back to Peng Kiet's question, which stock has liquidity? Clearly, Tesla is the leader of the pack. Okay? So right now, I'm going through with you the flow. Some of you may feel that, hey, teacher, is like, wow, you're moving quite fast, you know. Don't panic, relax. There's a logical flow I'll be teaching you. It's just that I let your questions take the lead and I start to show you the beautiful facets of our software, all right? So I answered 3 questions already. Last, refresh, and then we're going to start the next part of the class. And, okay, y'all got to post your question inside my question, or not you're going to mess up the whole community feed, all right? Can you all please make sure you post inside here, okay? If you post outside, I will not answer, or not you're going to mess up my whole feed right here. So make sure you are focused. Please post your question inside this box here called please ask your questions related to liquidity, and I've answered all these questions, and here we go. How many of you are feeling excited about just this quick, brief introduction? Wave your hands right now. Okay? I know some of you are having challenges trying to navigate, trying to click here, click there. Don't rush. There'll be a time and space for you to do that, and that's why I'm taking it really, really slow. In fact, let me show you where I last left off. We last left off on this slide. That's where from this slide, I move into demonstrating to you the concept of liquidity, right? So, at this point in time, you should be very familiar with COSI. You should also be very familiar with the concept of war. And the big question mark is, I've not taught you how to conduct the fiat analysis yet. All right? Now, you're also given a quick preview into what is daily bread, which is our one-day strategy. Right? So daily bread is our one-day strategy, and we've designed the strategies such that it's based on time frame. There's a 1-month time frame on resurrection, and there's a 3-month time frame on triangulation. So teacher, these things that you say right here on your slides, did you put it up on the website, on the software? Of course. Everything we've done, we operationalize it on the software. So here we go. First, please help yourself by knowing how to get into daily bread. Go step 1 into the 3 horizontal lines up there. We call it the hamburger menu. Looks like a hamburger, all right? So that's the place you click. So please do that with me right now. And then you open up the left panel. All right? Now where you want to go on the left panel is here. Stocks AI. And click on Daily Bread. That's it. So all of you please follow with me on these 2 steps so that you are following me very, very closely. Stocks AI and Daily Bread. And click on, tap on Daily Bread. Here we go. Bong. And after I tap on Daily Bread, oops. And you load the page. And your eyes should look at right up here. Let me just magnify it for you. It's really beautiful. This is the real time frame of an investor. We are the first in the world to numerically break down the time frame of an investor. No one has done that ahead of us. We are the first in the world to do this. And I very confidently tell you this because I read over 700 books on investing. That's how crazy I am. All right, 1 day, daily bread. 1 month, resurrection, which is based on FDA announcement, food and drug approval, like the vaccination approval, like obesity approval, like the other one is a high blood pressure, lymphoma, cancer, all kinds of diseases out there, right? 1 quarter is based on triangulation. 1 year is based on GOAT, greatest of all time. 4 years, we call it election cycle, is based on stock buyback. 1 decade, 10 years, right up here, is called trillion. And 1 lifetime, YOLO, is based on Bitcoin. And if you span across 3 generations, that's called greed. So this is the real time frame of a full-fledged investor. All right? Now let me share with you why I'm so passionate about this topic of investing. Because my deep and sincere hope for all of you is you will graduate from daily bread and finally arrive at the final box called greed. This is actually the path of your finishing line. What do I mean by that? So, on this note, when I talk about the concept of greed, I begin to realize that actually Singapore is at the forefront in the world of banking and insurance. We are truly at the forefront. Even the US or Canada is kind of falling behind us. We are the first country in the world to combine your banking needs and your insurance needs as a combo. You can call it a happy meal, right? This is the only country in the world that can put these 2 guys together and work together for you. So what has this got to do with the concept of greed generations? So 3 things to note. Number 1, today you can become a millionaire overnight if you have about $250,000 in your bank account, which is about $250,000, all right, US. So step 1, what the bank would do is this. You cough out $250,000 cash. The bank will loan you $750,000 cash. So at step 1, what you truly own is a $1 million portfolio. Step 1. Then after this step 1, then you go to step 2. Holy moly. What exactly is step 2? Wow, I want to show you this. And this is like crazy. Oops. Hang on in there. And I hope I got it right here. Oops. Hang on in there. Let me just hunt it down. Step 1, step 2. Hang on a minute. No, and I want to find it. I can't find it. Hang on, it's somewhere here. 1 second. Okay, is it here? No, it's not there. Okay, I think I put it somewhere else. I gotta go and find it out and show it to you guys. Where is it? Okay, let's go back to our step 1. Hang on a minute. If I can find it, it will be easier for you to understand it numerically. But I just can't find it right now. Okay, so let's go back. So step 1, you got to have a cash of about 250,000. At step 1, the bank will loan you 750,000. At step 1, you own $1 million portfolio. Step 2, from year 2 onwards, the bank will start paying you like $20,000 a year. And this $20,000 will upgrade to $30,000 and finally hit to about $40,000 a year. Every year till the day you go to heaven. That is step 2. But at step 3, this is the magic. Even when you go to heaven, you pass away because the product is pledged on the life of your child. Your child continues to receive $40,000 per year till the day he or she goes to heaven. So in actual fact, you are taken care of you, the generation number 1, till the day you go to heaven. You have also taken care of 2, your children generation number 2, till the day they go to heaven. And by the time your grandchildren, right, what are they left with? They are left with a choice. Do we want to continue grandfather, grandmother's tradition of getting paid every year? Or we want to receive the lump sum cash and build a great life? That is the true definition of this word here called greed. Your single effort resulting in the financial freedom of your future generation. So that's the reason why I'm so passionate about this topic, because you literally start off with a time frame of 1 day, and over time you graduate your thinking into generations, and this is a lifetime pursuit. It's worthwhile endeavor for you. Okay? So if we can operationalize the time frame into 1 day, 1 month, 1 quarter, 1 year, 1 election cycle, 1 decade, 1 lifetime, 1 generation, then jolly well, this is something that you can do for a lifetime. So my dear friend wants to pay you a visit. Hi, everybody. Say hello to Tabby. He can see all of you, and that's why he enjoys just jumping on my table and say hello. Okay, so that's my buddy. Okay, you stay there. Shh. Okay, stay right there. Okay, now he's on the table. Okay, so we got our time frame marked out already. And once we got our time frame marked out, you begin to realize, oh, you mean trading is so easy? Yes, it is so easy. For example, I can also come here and manipulate. I click on resurrection, 1 month. Ding! And you know the drill. The drill is quite simple, right? Go and click on the filters. And the magical filter that we always want to look for is called a net positive purchase, which is the mother of all metrics. Always make sure you select this guy, all right? Net positive purchase. And once you've done that, this thing becomes blue. Close the guy. And holy moly, it's showing you the best pharmaceutical stocks out there arranged in descending order of net positive purchase. The first one, $3.6 billion. All right, this is huge. And you can use this as the flow. Or you can go to triangulation right now, 1 quarter. Now, every one of the product based on time, we explain it over here, right? You can read the explanation. If you all don't understand, you can ask me during the Q&A. And under triangulation right now, the craziest of them all is kind of a Berkshire Hathaway sorted down all the way to Healthcare Realty Trust, to Growth ETF Vanguard, and so on, right? So again, all this goes back to the primary question about liquidity. This is what you guys have been asking me just now, okay? So, where did we left off? We left off right over here, right? I started investing in the year 2000. 2000, fast forward to 2020. That 20 years, what I've done is to operationalize everything I know about the market into a software known as Spiking, which I'm teaching you right now. But besides just using the software, you need to understand the theoretical thinking behind it. What is the investment thesis that we are chasing after? It's based on this. It must be based on the best money managers, what they do out there, with the question, will it spike so that I can enter one day before, right? So this part here is really, really important. So once you understand this, then I can begin to flow. Flow into what? Ready? Here we go. Here we go. Hang on a minute. Check this out. Look at the number here below. This is year 2020. And I got a symbol here called Bitcoin, because we are tracking the Bitcoin halving event that takes place every 4 years. We are also tracking a very important event called the presidential election, the US presidential election. Now, these two events kind of coincide on the same year. Very important. All right? So whenever someone try to bullshit you and say, oh, I can predict all the way until beyond 2024, I say that's rubbish. Because why? November 2024 is the next presidential election. How would you know who's the new president? The new president will set the new agenda. You can't predict beyond that. Are you with me? Just wave your hands. Hello? Are you still listening to the class? You can't predict beyond a president. Okay? And this is really, really important. So I will connect the dots for you guys, because why President Joe Biden equipped himself with $1.7 trillion. Because he's preparing for the next election. And all this is kind of in the game of works. And I just have to show you this crazy number, and you begin to think further, all right? This is really an important number because why? Here we go. U.S. House passes 1.7 trillion bill funding federal government through September, sending it to Biden. And this bill was passed on 23rd of December, 2 days before Christmas. Bipartisan. Excuse me. This is a challenge of having too much good food in Dubai. So, Republicans and Democrats pass it through 1.7 trillion, and they'll have to spend this money before November 2024. if you calculate literally, you have to spend this money within 24 months. Because nobody knows who's going to be the new president. And Biden going to use his war chest to run for a second term. This is his war chest of running the next election. All right? Now you look at this money and you scratch your head, holy moly, this money must go to where? It must ultimately go back to the stock market. You just can't hide 1.7 trillion out there. It must eventually flow back to the stock market, which is the concept right here. Remember this concept? The concept of the election. Okay? So I'm going to continue right now. I'm still on my first master slide on the time frame. Then we gradually introduce to you resurrection triangulation, right? We kind of gone through two very tough years, 2021, 2022. Kind of like a double top. Go up, go down, go up, go down. Today we are here. And this is a very big topic right now. Now, obviously, the first two flags, you can recognize it. Ukraine, Russia entered into a war. But why the heck China flag is shown right there? Because I want to show you the real thinking of the market today. And it's not to shock you, but to prepare you that we live in the real world. And the real world is this. Here we go. I want you to think ahead of this very important concept. 3, 2, 1. US 4-star general warns of war with China in 2025. So I did some check to reverse engineer what the heck are they talking about. And I got a very rude finding, a finding of what I call a 6 months window period. And what exactly is this 6 months window period? I'd like to take this time to share with you this finding so that you develop this love and curiosity about the market. And as you do your work to analyze individual stocks, you begin to realize, oh, this is really fascinating. I can connect global events to what is happening to individual stocks. And I act on the information, I make money. So you go through this very interesting cycle, which I'm going to show you how we do it, all right? Here we go. The first thing is identifying when is the next presidential election of Taiwan. Right here. Taiwan next presidential election must be held before 20th of April 2024. Okay? So you have April 2024. And then I'm going to take out a very interesting calendar. April 2024. And here we go. I'm going to come to this calendar and switch it to 2024. And let me just reduce it a little bit more. Oops. 2024, April. Right? Which is this date here. Ding. So if you consider the whole month of April is gone, then effectively we are left with how many months before the US presidential election? Let me show you right now. 1 month, 2 months, 3, 4, 5 months until September. October, 6 months. Because the presidential election for the US election is 5th of November. So thereby creating a very interesting vacuum which is dated like this. 20th of April. And then it created a vacuum to 5th of November. Alright? And I'm going to put these two guys like this, and we're going to draw a box in between. This period inside here, this date range, is the most dangerous period in our lifetime. And it probably represents the last chance for China to take back Taiwan physically. Now, why is that so? Because this warning didn't come out from me, yours truly, your teacher. It came out from a 4-star general that sent the same memo to over 110,000 troops in the US Army. It's not a secret memo, it's a public memo to US military personnel. Because why? In the event, I suspect, if on 20th April, a Taiwan president is elected that is going to pursue the path of independence, I think China will make its move. And they will make the move before the next president is elected to create a chaos during this vacuum period. So we have a very interesting window here. I'll be sharing more insights about this particular topic in the upcoming Cozy Live Trading class, all right? And I'm trying to connect many dots just to predict a war. I think this is one of the crazy things that I do. And many things will tell us how to predict a war, because I'm going to shock you right now. How do we predict a war? Here we go. How do we predict a war? How to predict a war. Wow. Okay. So we start off with this thesis, how to predict a war. And then we ask our robot, hey, Mr. Robot, Spiking Robot, can you predict a war? Looks like reasonably it can predict a war. So how do we go about getting this information from robot? So how many of you are still alive right now? Wave your hands. Oh! You're getting freaked out already because your teacher talk about something really interesting. And here are the steps. We go back to our software. We always start, the ground truth for us is the data, right? There's no other ground truth. So here, let me start off with this company called Occidental. All right, ticker symbol OXY. And the full company name is called Occidental Petroleum Corp. And we're going to go to step 2 right here under insider trading analysis. Click on step 2. So step 1, type in OXY. Then step 2, go and click on step 2. All right, click on step 2. And what I want to do over here is this. Under show filters, I want to look at quarter 3. Right? So I started from here, show filter, and then I changed his to quarter 3. Okay? And I spotted this guy called Berkshire Hathaway, who put in 2.4 billion in Q3 last year. Over 3 months, he invested $2.4 billion. Now, the total investment by Warren Buffett right now is about $12.9 billion, all right? Now, that's a lot of money. So what I'm going to do is I'm going to click on Berkshire Hathaway. Don't panic, relax. I'll show you different ways to get to this data. I'm just showing the first way. Later on, I'll show you another way. Pay attention first, and later on I'll show you another way to get in, all right? Click on Berkshire Hathaway. And we're going to start from here. Please see very clearly under this column called total shares owned. In Q2 2020, he sold off all of his shares of Occidental. 2020, between the month of April to June. How do I know that? Right over here is showing 1st April to 30th of June. How do I know he dumped everything? Because there's this word called sold all, dump everything, alright? Now I'm focusing on this column called total shares owned, okay? Now after he sold off everything, you realize there's no more purchase. All this empty, dash, 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 empty, right? And suddenly, out of nowhere, 4th of March, he went to buy 91.2 million number of shares. So what is the meaning of 4th of March? Because the Ukraine war started on when? Started on, here we go, (24th of February) 2022. Okay, so that is the date of the war, and then you kind of correlate this to 4th of March. The moment the war started, Warren Buffett went to buy the energy stock. Now he delayed by about 1 week. All right, so if you take 28 days of April, 4 days plus 4 days of March, so that's about 1 week. 1 week later, he went in to buy energy stocks. So in order for us to predict the next war, that's the time when Warren Buffett will double down, triple down to buy even more energy stocks. Now he already bought this one because of the Ukraine war. And since then, you can see he's been like buying non-stop. Ding, 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 ding. All the way increased. All right? He's still buying, increase, increase, increase. And finally, he owns right now total of 194 million number of shares. $12.9 billion worth of this stock. Okay? So this is the way to get into this data, or I show you another way right now. You can also look for Berkshire Hathaway at the top. And the difference is, look for the insider Berkshire Hathaway. I'm not looking for the stock, I'm looking for the insider right now, all right? Click on it, Berkshire Hathaway. So if you want to follow me, this is your second approach. Click on Berkshire Hathaway, tong. And right over here, it shows you the breakdown of his entire portfolio. 50 stocks that he holds for Warren Buffett, and Occidental is right up here, 12.9 billion. And I can click on Occidental Petroleum here, and it'll show you the same data I shown you just now. From the day that he dumped the stock, all the way to 1 week after the war started, he started accumulating the stock. Everything is transparent when we open up the black box. And we are still on slide number 1. Okay, my friends. So you can see how fascinating the data is. And we are still right now at the year 2023 inside this box, right? So I'm going to fast forward a little bit right now, increase the pace. I've been speaking for 2 hours straight. The next big event is 2024. I shared with you my thoughts. There's a 6 months window, a potential strike from China into Taiwan, which is predicted by a 4-star army general from the United States. All right. And then we fast forward. We look at 2025, 2026. We also look all the way to 2028, the next presidential election. Fast forward, we look all the way to 2030, which I predict will be the year SpaceX will go IPO. And then, of course, that completes the entire journey. We can predict at most the furthest out to 2030. 2030 will be an interesting year. It will be the year of the World Cup. And I believe Saudi Arabia will win it. They will be hosting it with Greece and Egypt. Tripartite World Cup. And, you know, they already got Ronaldo to be the ambassador. And my friend happens to be the US ambassador of Greece. I'll be calling him up and ask for some insider information. And let's see whether Saudi Arabia is going to hold the World Cup right there. Okay? So what I've done from the beginning until now is this. I've gone through with you the entire timeline of how I started as an investor in 2000 and predict all the way out to 2030. And everything I've done is operationalized on the data so that you and I can use the same information and then go inside there and ask the question, will it spike? Can I catch the spike? And so our job right now is to make sure you really know how to navigate on the software, click on different parts of the system, and getting very, very comfortable using the data. All right? I'm going to open up the floor for some more questions before I start teaching the fiat analysis. And thereby, if you have any questions, please ask right here, right? So I'm still on this liquidity question right here. Please post inside this part here so that I don't have to create an extra one. If you have any questions, please post within my main post on liquidity. All right, how to get here? Go to spiking.com/feed, FEED, and then look for this particular post. Now, some of you posted outside the question. Can you please go and delete your question so that we don't jam up? And then oh my gosh, where's my question now? Okay, so if the scroll down is right over here. Okay, so I'm going to give you 1 minute to go and post whatever question that you need to ask, and then we, after the Q&A, we go for our first break. Here we go. Okay, there are questions coming in. Here we go. The first one from Ash. What if the earnings are bad? Wouldn't Tesla have gone down? Yes. If the earnings are bad, Tesla will have gone down. So it also meant that those who bought into Tesla, remember he has a net positive purchase of $4 billion, they will have all gone down together. Now, I will rephrase the question back for you, Ash. How would you have done it any other differently? How would you have done it any other differently? Meaning to say, today you have a choice to go in together with the big boys out there, or you go in on yourself alone. You're going to perform the same amount of work, but in my definition is this. For any other strategies that someone deploy out there, whether it's fundamental analysis or technical analysis or some kind of magical analysis, end of the day, what counts is the guy must put money on the table. Please wave your hands, confirm? Yes? Because if you don't put the money on the table, it's just bullshit. it's just crap, right? So the moment the guy puts down his money, it is his commitment. Commitment that he believes something is about to happen, that's why he puts the money down. So that is the logic that we go. But you tell me if there's a better logic than this. All right? So if it goes down, then that is where you become a long-term investor. Now, you're not shortchanged in the sense that you must always get out, get in, one day make your money. If everything goes fine, you're going to make your money in one day, which you have beaten majority of the masses out there. But most of them out there go in with a long-term investor window of between 1 to 7 years, holding period. But with this approach, you have a chance right now to go in, get out in one day. If not, you just got to hang on with the ride. Just like any other big investors out there, they don't just sell off because the price gone down. Fundamentally, they believe Tesla is a good company, right? So I hope that answers your question. Next one from Kelvin. Can you explain the color of the spiking rocket is black or white? Which one more powerful? So if the rocket is being selected, so go back from, let's say we go back to Tesla. Oops. Tesla, spell wrong. Hang on a minute. I think you're looking from the Daily Bread site. Hang on a minute. So Kelvin is asking from this page here where you see there are rockets here, right? So when it's black rocket means it's not a rocket. The rocket must be full color, all right? So that's how we designate it. Like this one will be 4 rockets out of 5. This one also 4 out of 5. That's what it meant, all right? Now, typically what we want to do is this. We want to put in key relevant information under the Daily Bread page so that you are not like distracted with too many things. So what is the key relevant information? For example, I look at it box by box, right? This first box here, I kind of put the key relevant information, right? 9.7 star out of perfect score of 10, and kind of having a 5 out of 5 rockets out here. Are there calls versus puts? Like the guy below, Pfizer, got more calls than puts. And it has an open interest because it offers options trading. So that's the difference. Then from there, my eyes will very quickly move down to here. In fact, the first place I always look out for is this place. This is always my first look. Because again, going back to the concept that nothing beats money talks. All right, how much money actually went into the company is most important of them all. Then from this second box, my eyes will move to the third box. I want to know who's the lead investor. How committed are they? For example, the second lead investor increased by 100%. Q2 versus Q3. Now, what could have fundamentally changed over a 3 months period? Between quarter 2 to quarter 3, 3 months period. For someone to double down 100%, right? That's 2x. That means the guy better know something that we do not know about, right? Another example here, this lead investor below increased by 5 times, 500%. What has fundamentally changed for Pfizer between 3 months ago versus 3 months into the future that he willing to bet 5 times more money, right? So those are the questions I ask. And then finally, I look at the catalyst. The last box is the catalyst. What are the catalysts that will cause the stock price to move? Which goes back to the question of war, W-A-R, okay? So good. Any more questions from here? Let me just make sure I tackle all your questions. And last, refresh, and then we call for a time break. Now, during the break time, I got some homework for you guys to do. So here we go. So we have Olivia. How does Spike calculate the rise of Spike to 8% in advance, or is it already achieved? In that case, we are too late. So my encouragement to all of you is don't overthink about the data. Everything about the data from an engineering perspective when we build it is to tell you at this moment of time, what do we know about the company? That's it. At this moment of time. So you come in today versus you come in tomorrow to look at the same company, the data may change. Because every day there's fresh data entering the system, right? So at this moment in time, what does the market tell you about this stock? That's the latest data. That's the best decision you can make. You cannot say, oh, I want to see a data 3 months out, 5 months out. There's no such thing. It can only tell you what is currently available now. Okay? So my encouragement to all of you is you always start off with the mother of all metrics, which is the universe net stock purchase. Start from that point first. Because if you don't start from this point, you're going to get distracted with many things. You must always start off with why this stock got 4 billion net purchase. Why this stock got 5 billion net purchase. Why this stock got 1 billion net purchase. Start off with the big money first. Then you filter off to look at the smaller things. Now, another way that you can do it is you reverse. You start off by asking all the small questions. Guess what? End of the day, you got distracted already. You forgot that the most important metric is who put the money down on the table. You get distracted. All right? So, initially, when you use the software, start off by understanding why there are more people putting money into this stock compared to other companies. So, how do we do that? So, here we go. We go back to Daily Bread. Okay? Now I'm going to change this a little bit. So I'm going to let you see like over the next 2 weeks. Apply. And here we go. All right. So I've manipulated the date range from 30th of January to 11th of February. Now this is like 2 weeks. Then what you need to see is how many companies are announcing earnings. Holy moly. 435 companies announcing earnings. Now that's too many. That's too many, right? So you must develop an approach to prioritize which is your low-hanging fruit. Now, you can have many ways to prioritize. You can say, I want to look at rockets, I want to look at percentage, I want to look at this, look at that. But end of the day, I can tell you the most powerful is still here. This particular column. That's it. This is the most important column. And then you start asking questions like, oh, this guy is 4.4. The second guy is 3.6. The guy is 2.8. Wow, they are very close to each other. So if they are very close to each other, what should you do? Then you start comparing further. I show you. This guy, the lead investor, is 3 billion. This stock, the lead investor, is 3.5 billion. Now, both of them are showing like big percentages. This is 54 times, 5,000%. This is like 991 times, 99,137%. This is like crazy, right? This is 88%. This is 35%. This is 300 and 400%. Then I'll start looking at, okay, this guy is firstly investor is 3 billion. The second one is 681. So straight away I eliminate the first guy, because the first guy, the lead investor, is only 800 million. Right? It's so out of reach compared to these two. So straight away I eliminate. And I come down to here. Whoop. Now I look at these three guys, very close. Lead investor 3 billion, lead investor 3.5 billion, this lead investor also close to 3 billion. Almost on par, right? Then I look at the second guy, 681, this 485, so straight away I can also cross out this guy. Just by looking at who's the lead investor. That could be one approach. Now, I'm going to show you many approaches to looking at the same data, which we'll do later on in our live trading. But what's the core? The core must be which stock attracts the most money. Are you with me on that? Wave your hands. Because you try to find any other thing, you're going to get confused. It's not about red line cross blue line cross red line. Not about that. It must be based on money. And regardless of whatever strategies that you use, you must remember everybody got different strategies. But end of the day, the consolidated influx of money is the key determinant. All right? So you can test it out, and we're going to show you in the live trading later on how we shortlist the candidates. So I'm done on this part, and next question from Happiness Coach. Though we need to use filters on daily bread, resurrection, and triangulation. Now we always do that for the net positive purchase. We always apply that, all right? So you can just go and play with it. Typically for resurrection, we don't make it the default filter, because sometimes we are looking for phase 3 clinical trial or the final stage, PFU, the final stage before the drug get commercialized. So I'll show you later on in a while. So why are they? Okay, you need to rephrase your question. I don't understand the meaning of your question. Next, Joseph. If Tesla went down, do we use a stop loss when trading? If yes, what percentage would you recommend? So the question for Joseph is, how would you apply the stop loss if you do not know how low it's going to spike down? All right? Now you can do this, and I'm not too sure whether are you an experienced trader or not. You can enter to buy at $100. All right? And you also can place a stop loss at 25%, $75. Right? But the real concept of stop loss is, if the stop price goes down, it can drop all the way to maybe $60. Which is over here. So do you think you are really getting out at $75 or $60? Let me tell you the answer. You will get out at $60 if you place a stop loss at 75. Because your stop loss is only operating during live market hours. It does not go this way, It does not go like, no, it doesn't go this way. What really happens is, it goes down, the market closed, the next day, the market open, boom, it will appear right here. You have this big gap right there. So you're not really getting out at 75. So this is the part that many traders got this false assumption that you place a stop loss of 75 means you're out at 75. No, you're not out at 75. It depends on how low the stop price spikes down, and then you're caught. So typically how we do, there are 3 approaches to your question. Number 1, we don't use stop loss, we use DCA, dollar cost averaging, which is one of the very popular approach used by Katie Wood, which is one of our top 100 insider. All right. Or number 2, don't sell at a loss. Just wait. For a stock to receive so much insider money, do you think those guys who put in $1 billion versus you putting in $1,000, they'll sit there and do nothing? Do you think seriously they will just sit there and do nothing? Let me tell you what they'll do the next day. They'll call up the CEO, they'll call up the chairman of the board, and they'll do many things behind the scenes that you and I cannot see. All right, so over time, most of the great stocks over time will go up again. All right. Then number 3, what else can you do? Oops, there's number 2 right there. Let me change that. Hold on a minute. Number 3, while you're struggling with dollar cost averaging, maybe you don't have the war chest. Oops. How come it changed back? Hang on a minute. Sorry about it. I forgot to press enter. Don't sell at a loss. Okay, good. So number 3, you had dollar cost averaging, don't sell at a loss, and focus on another spike. That's the most that you can do. Hold on a minute. I'm going to press enter again. Focus on a new spike. Okay, so it stay that way. Okay. Now, if you have many other new ideas or fresh other ideas that I have not thought of, please share. What else you can possibly do? Because if you place a stop loss and it goes below your stop loss, you are not really selling at the price that you want to sell. So there's a difference between today versus tomorrow and versus interval intraday trading, right? So that's a bit more advanced concept for some of you. So let's continue. Any other questions that you guys have on this part? If not, last question from Aurora. What I mean is recommend us to use net possible. If that's so, why are other filters there if we don't need to use them? So the other filters are there because our other students are using it, not because we are putting it there for fun. It's a way for you to do your research, right? So some students love to do research based on market cap, especially those like very traditional, fundamental kind of a group of traders. Some are looking for some other metrics. So it's for you to manipulate, play with them, and as you read up more books, as you read up more ideas, you can apply them, right? And I can tell you, end of the day, you still go back one loop to the core metric, who put down the most money, right? So it's for you to expand your knowledge. Okay, I'm done on this part. And before I let you off on the break, this is where we left off on the timeline, and then we come back. We're going to introduce to you the one-by-one concept starting from investors. Then we go on to the individual product of daily bread, resurrection, triangulation. And by then, the market open at about 10:30. We go for live trading, all right? So please do this during the break time. Break time is a time you go and check back on what you missed out just now. I know quite a number of you stepped into the class late, or maybe I was moving a bit too fast, like how to open up the Yahoo chart. Can you please take the time to do 3 things? So number 1, here we go. Learn how to click on the icon there called spiking, so that you know how to see this particular page. This is the default home page of our software. And on this default home page of the software is to show you if there are stocks performing 5 to 100% movement in one day, then jolly well, this is the focus of what we are doing. Okay? That's the liquidity. No different from someone who is investing 10 years or 1 year horizon. It's still the same amount of work. But we prioritize our work to get into this spike before it happens. That's the core of our thesis. All right, so this is the page that you need to know how to get in. Number 1. Number 2, I click on any of the company out there, and then I kind of click on the view Yahoo chart, right? Just click on it, and then you open up the Yahoo chart, and thereby to see this thing, how the heck this guy got 10.56% between yesterday versus today, right? So what I do, I went to click on the 5-day. Ding! And that's exactly what's happening in the market. Before the market closes, you entered at $20.75 before the spike. And after the market closes, the stock price spiked up to $23.50. This is the reason why you have a 10.56% spike up yesterday versus today, and thereby you understand our logic. Our logic is to catch the spike before it happens by entering the day before the catalyst event. All right, so that's your step 2, how to go and see this Yahoo chart. Then and only then, finally, step 3, click on the hamburger menu in order to see the daily bread. Stocks AI followed by daily bread. That's it. Start off with Stocks AI followed by daily bread. Click on daily bread, and you see the 8 time frames presented in front of you. Here we go. Later on, we'll be making use of these 8 time frames to start the journey of analysis, and then we'll tackle more questions in the class. All right. So time check. Wow, I've been speaking for 2.5 hours already. Right now, time check 9:30. We're going to take a 30-minute break. We'll come back at 10 o'clock sharp. All right. So 10 o'clock when we come back, we're going to go all the way through before the opening bell, and after the opening bell, what do we need to do? And I hope you guys really be very disciplined. Go and do the 3 things. Make sure you are very, very confident in navigating, and so that we really save the time on answering questions of finding out more about the stocks. Okay, so this is the break time. So go and do your homework. I shall see you exactly at 10 o'clock. Thank you.